as Americans, we love our things and we love our cars. Even if we have to downsize the property, most Americans will not downsize their belongings. And so once they outgrow their current space, they outgrow the garage, they're going to seek another garage to store stuff in. And that's where the self-storage kind of comes into play.
Multifamily got beat up kind of first, and then you're starting to see it now with the storage unit. What's the next?
Get ready for the next iteration of you on your path to becoming wealthy. On this show, you'll get the insider's view on wealth creation, the class none of us got taught in school, with my co-host, daughter, and beginning investor, Sophia Bosch. And now, let's get started. Welcome to the Becoming Wealthy podcast. I'm your host, Michelle Bosch, my co-host,
Sophia Bosch.
And we have an amazing guest with us today. We are so excited. She is the director of investor education at passiveinvesting.com. She's the founder of ashwealth.com. She is a best-selling author. One of her books is called Money for Tomorrow, How to Build and Protect Generational Wealth. She published actually this book together with Bigger Pockets. She also has an international bestseller called Resilient Women in Life and Business. She's the host of her own podcast and YouTube show, is a partner in about 6,500 residential units, 15 express car washes, Sophia, more than 2,200 self-storage units, because I know you've been excited about self-storage or just curious in general, right?
Yeah.
And I'm just very excited to introduce to you all Whitney Elkins-Hutten. How are you, Whitney? Welcome to the show.
Thank you. I'm doing well. Thank you so much for having me on.
Thank you very much for being here with us. So what did you do before the world of investing and in real estate?
I actually worked in public health, and even when in my early years of investing, I was still working in public health. So yeah, I didn't come out of the womb a real estate investor or, the director of investor education at passiveinvesting.com. I didn't come out of the womb writing a book or having my own business or my own portfolio. It started with one investment. And I didn't even consider it an investment. I bought a house with a significant other, and a month later, the relationship fell apart. Then I had a house, and I had to figure out what to do with it. And so stuffed it full of roommates, needed a complete rehab on the property. So got that done. And then 11 months later, I sold the property. And it was when I was doing my taxes, I'm like, oh, wait, I made $52,000 on that. Oh, wait, I made more than that because I hadn't been paying for any of my own expenses, the principal, interest, taxes, insurance, none of the utilities. Matter of fact, I've been putting money in my pocket every month. I'd even gotten the money from family to buy the property and do the rehab on the property. So just all these things that people try to figure out, when they first get into real estate, I just kind of stumbled into. I really wish all of my deals went as swimmingly well as that first deal. But at some point in time, you have to kind of pay your dues. And for me, it was on the second deal. But anyways, we can shortcut any part of the story. But, I did, a lot of live-in flipping and house hacking, then scaled a almost 40 unit single family rental portfolio, and then started getting into larger multifamily deals. And then raising private capital. But that didn't happen overnight. It was a systematic process from there.
Yeah, I can totally relate. We started flipping land. Once we had that, we had that as our focus for about 6 years, and that was working like clockwork. We started expanding into single families, and then, instead of one house or one door at a time, let's start looking at 100 doors at a time. So I think for most of us, it's an evolution. At least our investing has followed our own personal development and our own personal evolution, and it sounds like it was for you as well. Now, tell us about passive investing. So is this, are you basically, when you do fundraising, are these for specific syndications or a fund in general? Tell us a little bit more about that.
Yeah. So passive investing in general just means, two things, and we try to combine the two, because a lot of people get into real estate because they want passive income, meaning they don't want it to be booked as active income. They want the tax benefits, but it doesn't flipping land and all that. It doesn't mean that you're passive with your time. Passive real estate investing is where you move into earning passive income and you're passive with your time. And so we really try to marry the two together. And so really what this looks like is like, hey, do you guys want to go buy a building together? I'll do all the work. You bring the money to the deal, and then we're going to split the profits. But instead of doing that with just one investor, like say like a joint venture partner or a handful of partners, we do this with, 10, 20, 100 limited partners in order to take down a larger deal.
Sophia is familiar with this. She's even visited, properties with
Walk the
my husband
properties,
where,
yeah.
he has been visiting the property with potential investors that we're looking, to fundraise from and really painting a vision of, what the project is going to be and so on and so forth. So you've had a little bit of the taste of, what she's
Yes.
talking about. It's not something conceptual to her anymore. It's actually, boots on the ground. She's been doing that. So that's awesome. Now, so we get the real estate part. What
Yeah.
we don't know anything about is the car washes and the
Storage units.
Sophia is so excited to learn
I don't
about
know
those.
why, but I've heard that before, and it's always piqued my interest a little bit. I was like, I never thought, like, I always thought of like apartment complexes, but then I realized storage units are practically the exact same thing, other than it seems easier.
Because there's no broken
Yeah,
toilets
maybe
Yeah.
and
it
no.
can be. Yeah, so I mean, for storage, so this is how I look at it, especially if you're, a high income earner or you're, a small business owner doing really well and you're trying to figure out, hey, I want to turn my active income
Mhm.
into passive income and invest in my future. So I've diversified outside my business. It's not attached to my business. I'm not double downing there. This could be, you create true diversification, right?
Mhm.
And so when you start moving into that realm, you got to think, okay, how am I going to start scaling this passive portfolio? Well, multifamily is kind of a first logical step. Why? Because everybody needs a roof over their head.
Yeah.
And most of us have owned our own homes or we've rented a home, so we're quite familiar with that. But
Yeah.
yeah, Sophia, I totally get it. A lot of people are like, I don't understand how express car washes work. Like, why do people do that? And why do people do self-storage? Well, because as Americans, we love our things and we love our cars. And so we will,
True.
even if we have to downsize the property, most Americans will not downsize their belongings. And so once they outgrow their current space, or maybe even they have a house, they outgrow the garage, they're going to seek another garage to store stuff in. And that's where the self-storage kind of comes into play.
Mhm.
Now, self-storage isn't just for the person that has too many toys. It also benefits from, death. When, my mom passed away, we had to clear out the house. What are we going to do with everything, until we figure out how to divvy it all up?
Mm.
It benefits from dislocation, meaning people that have to move from different parts of the United States for, say, for a job or maybe a relationship.
Yeah.
It also can benefit from, unfortunately, divorce.
Mhm.
So, a household breaks apart and one of the partners has to move out of the house. They need a temporary spot to house their belongings. Now, think about this. You rent a garage, say for $100 a month. I can add value as an operator by increasing the rents. I can increase the property value. Well, if I even just bump it $10 a month, are you going to move all your stuff out for $10? Probably not. It's a pretty sticky
Mhm.
asset class once people get in there. Now, people do leave. People will move their stuff, but usually it's because,
Nah, they don't
they're
want to go through that hassle of going
yeah.
through all of that crap in there.
Yeah, I can
Yeah, I
I
imagine.
mean
wouldn't
it,
want to.
And for us, this happened to us. We decided, even
I know we have
pre-pandemic
a storage unit.
to have our entire team be virtual. And we went from, a almost 5,000 square foot office space to where, okay, everyone's working from home, we're going virtual. But
We have a
now we
bunch of
had
stuff.
a bunch of stuff that we needed to
oh, yeah.
store. And since pre-pandemic, we have been paying for storage for all that stuff. So I understand what you mean about it being sticky for sure.
I have a
Seriously?
funny story. I was like right before COVID, I was working at head operations for a tech company alongside all my investing, right? And I guess I like left there about a year before COVID, but I had moved them into this large office. And one of the guys just pinged me about 6 months ago. Same thing. He was like, I've been paying for a storage unit since the beginning of COVID. Do you want a TV? So I'm like, maybe. He
Yeah,
just finally was getting rid of it. I mean,
yeah,
and that's what happens is like I said, it's a four metal walls and a concrete floor. Some storage units also come with climate control. So it can be something that serves an immediate purpose, or in the case of my family, my husband needs a place to store his mountain bikes, and like when he goes and works on them, he wants it to be air conditioned. Like he doesn't want to be in a sweat box, right?
yeah,
So it can be, help kind of expand the current domicile footprint by having storage someplace else.
yeah. You've never visited
Mm,
ours, Sophia, but
I
we,
I
oh,
think I
have you?
have.
You have? Well, you know that you can just basically drive through, you can in the pin code,
Yes,
and then the
yes,
garage
yes.
door kind of like opens and you go into this area and it's all climatized, basically air
Yes,
conditioned,
so
and you go
you
up the
get it.
elevator.
Yep, I've been there.
Yeah,
Yeah.
so and what I
It's a
noticed is
maze
that
though.
there
I
was
can
not a
never
single
find it.
person there. I visited our
Yeah,
storage
I've
unit
never
once.
seen anyone else in there.
Yeah, so there was no, so one thing is probably low overhead from the perspective of just labor. So one pro there, another pro, the stickiness, and the ability to force appreciation. What are some of the cons? What are we not seeing?
Yeah, so I 100% agree with you on some of those efficiencies that you can create, and that's part of why you might partner with or buy from a mom and pop operator because they still have the full-time person
Yeah.
and they're paying them benefits at the front desk. And so that's a unique opportunity for you as an operator to buy that property, put in all the bells and whistles and the efficiencies.
Hmm.
Okay, but the cons that you kind of have to watch out for, it's a commercial business, so you have to understand your competition. And so we really look at, one, location, location, location. Okay, we want to be in the right MSA in the right part of the town. I mean, down to the right street corner to where people can make an easy right-hand turn into the area. So
Oh.
we really look at traffic count, but we
Uh-huh.
want to know how much competition is within 1 mile, 3 miles, 5 miles. And then how many homes are in that same geographic area? And so there has been in some markets a lot of hyper supply. We've heard this about multifamily real estate. I mean, multifamilies kind of gotten beat up, not only from the interest rates, tax hikes, insurance hikes,
Hmm.
but also from oversupply in some markets. And we're starting to see that cycle with self-storage in some markets. And so you really want to pay attention to the hyper supply there. But sometimes the hyper supply is
What's a healthy ratio like of competition or of units in a specific like I don't know area like mile radius or whatever?
it depends on what kind of, we play in the kind of the class A. So we want to see limited competition within a 1 mile radius and maybe one or two competitors in a 3 mile radius. And we want to see, at least, 20 to 30,000 housing units
Yeah,
pretty close by in that same radius. But everybody's going to have their kind of different underwriting criteria.
yeah.
For some people, I have a friend of mine that has RV and boat storage
Mm.
out in I mean, he's in Frenchtown, Montana, like, which is 15 miles from Missoula, and people will drive there to put their stuff on his property.
Yeah.
So it really depends on your market and what you're catering to.
Yeah, yeah. Have you ever gone into a project where you first get the land and then you put the self-storage, basically you develop it yourself?
We don't do ground up development. We will
Okay.
look for opportunities where
Already
there's an
there.
expansion opportunity.
Okay.
So either we can take the current land, maybe there's a 5 acre parcel and we can build more units on there, or we can turn that parcel, if it's not exactly builder grade, we can turn it into a parking lot and add in like RV, car storage, stuff like that.
Okay, interesting. Yeah, awesome, awesome,
Mm.
awesome. Yeah,
Oh
so
wait, I had a question.
go ahead.
Um, so you said real estate. or not real estate, but like multifamily got beat up kind of first, and then you're starting to see it now with the storage unit.
Mhm.
What's the next one that you predict?
I mean, everything is really hyper regional. I actually just did a
Yeah, true.
presentation for our investors today over multifamily trends for 2025. And I'm like, hey, take this for a grain of salt because we're talking about national trends, but you need to understand what's happening in the market that you're investing in
Yeah.
because that market might already be through the recovery and, on the upswing, right?
Oh
They're
yeah,
into
true.
recovery, into growth. Some markets are just coming into oversupply. I love Austin, Texas. I love the Austin San Marcos area, but I've been there multiple times this year. There's a lot of cranes in the sky and a lot of empty offices and multifamily units. I mean, it's going to take a while
Where
for
do
that
you
to be
live, Whitney?
absorbed. I live in Boulder, Colorado.
Oh, okay, you're in Boulder, Colorado. Okay. Yeah. Sophia, now when you mentioned Austin, we've been talking about University of Texas at Austin as a potential school to tour,
Yeah,
because we're doing college tours now and looking
I'm a
into.
Sooner, so I can't quite get behind that decision, but I understand why you would look
Uh,
there.
okay.
Yes, yes, yes. Now, I know that you are, with the books that you've written, that you are a big believer of empowering women, with knowledge, with investing, education, and so on and so forth. What are some of the hidden forces that slowly drain, that you see slowly draining finances and that prevent not just women but just families in general, to start investing and so on?
Oh my gosh, that's what my whole book, Money for Tomorrow, is all about, is understanding how to create wealth. And a lot
Mhm,
of people think that's like, how do I make money? It's also how do you set aside the time and put in the systems in order to make wealth creation automatic?
mhm,
How do we keep it? So I think, if I can give an immediate answer to you,
mhm,
is and people who get into investing, they focus so much on growth
mhm,
and then they neglect putting those foundational systems in place to make wealth creation kind of automatic for themselves. And some of it is self-leadership. Do I have
mhm,
the right vision? Do I have the right strategies in place? And most people just jump to tactics on how to grow their wealth. They like jump into real estate and self-storage, and then they wake up 10 years later and they're like, I don't want a flipping business. I want something entirely different. But the biggest place that I see investors mess up is in how they choose to keep wealth. And that stems from the systems that are in place from the foundation. And then are they focused on all the different ways to, keep money, not blow money on paying fees or, using interest inappropriately, or heaven forbid, like outsourcing their liability through proper use of insurance. I've seen horrible things go wrong in people's portfolio just because they just got cheap on a car policy, right? Or a home policy. And so those are the type of things I really love working with people on is let's get the foundation firm, no holes in the plan, and then it makes growth so much quicker and easier. And moreover, you're more confident because you've got a firm foundation.
mhm. What are some of the pillars of that foundation? So you mentioned one being vision, the other
Mhm.
one systems. What are some of those systems? Can you tell us a little bit more about those?
Yeah, I mean, I work with high income earners and especially business owners, and they do an amazing job at tracking their income and expenses and their balance sheet and their business. But I say, okay, let's take a look at this in your own personal life, and they're like, what? I get the deer in headlights. They're like, oh, I haven't looked at my credit card statement in 6 months. And I'm like, okay. So you're telling me you want to invest at least 30,000 a month. You think you have that, okay? But you don't seem to have it in your checking account. Let's go
Mhm,
find it.
mhm.
Let's make
And
sure it's there. So
and
we
how
put
can
this.
you make sure basically that you're actually getting paid from your business, consistently every single month so that it does end up in your bank account? We are just talking, earlier, like I said, we were doing an episode on money and cash with Sophia, and I'm like, it's a different experience, to actually have the cash and have a connection to the cash than to just look at your financials, in a spreadsheet and at the end of the month versus having on a daily, basically a connection with money and actual cash. And I think you just brought it home right now that it doesn't happen just, you know, to you, to me. I mean, it happens to most people out there that they're running businesses, they have financials, they're looking at spreadsheets, but then when it comes to actual, okay, where is the actual cash, um, there's a disconnection, I think, and it comes from we living in a world of everything being on, auto deposit. It's being sent to your bank. It's on auto debit. It goes out of your bank, and you never see the money. And so, how can you ensure, for example, in your case, when you're talking to businesses, I'm assuming you're trying to figure out a mechanism to make sure that some of that cash that is, they can see on their financials is actually ending up in the bank account, and they can
Yeah.
actually see it in their personal bank account.
And when it hits there, are they paying themselves first?
Yeah.
Right. So, we go back. I equate it to coaching soccer. I used to coach my daughter's soccer team, and it was every practice we show up, we run around the field, we stretch, we pass the ball, we work on the basics and the fundamentals. And then over time, that makes the game simpler and simpler to do. Then we can get into the cool, like, field strategy. We can get into the, everybody wants to learn how to do a bicycle, kick and a, scissor move, right? Like,
Yeah.
all these cool things that you see like on the television, but you have to, even that person on the television, that soccer player you're watching, pick your sport of choice. They warm up with the fundamentals. And so I have to, what I do is I help people come back to learning how to self lead themselves. If
Mhm.
you would do lead yourself as you would lead an employee in your business in order to get a result, we have to do those same things in our personal finances.
Yeah, absolutely. I can totally relate to that for sure. Um, how long does it take, you think, for some of your clients to lay that foundation? Is it something like they're like, oh my gosh, I haven't done it for years, and people might think, well, is it going to take months, to put up,
Like a
like,
daunting
yeah,
task.
a daunting task. Like how
Can
long does it
be.
take? Say that again.
Yeah. So, initially I work with people for 6 months, and we can get them to where we're going to find at least 20 to $30,000 of savings and or missed income in
Mhm.
that 6 month time period, which is multiples. They learn those skills once, they can implement that over and over and over again. So they can continue to find and optimize, and not only take that 30,000 or 50 or 100 that we just saved and invest it for the future. So um, if somebody's really dedicated, it'll probably, they could get it all done in a month, honestly.
Mhm.
But, you know, life happens. And so usually I tell people, to comfortably get it done, enjoy life. If there's the holidays in the middle, 6 months, give it 6 months.
That's six
But
months.
that's a huge transformation that will not only, we got a little thumbs up here on Zoom. Thank you. But that transformation not only is not just gonna impact them, that is a skill that they can teach to their kids
Mhm.
and pass on to the next generation.
Yeah, because that's something that we talk about with Sophia. That it's important, at least for us and our family, for her to not just be the recipient of financial wealth, but also the recipient of the skill sets that created that wealth, the values that
Yeah,
created that
because
wealth, the
what's the
mechanism.
point of? I don't understand families that just pass on the
I
like money. Like if you pass on the money, what are they gonna do with it? Most of the time, they're not gonna know what to do
with the
with
money.
it
Yeah,
other than just spend it
yeah, absolutely.
or
That's shirt
save
sleeves to
it,
shirt
not
sleeves
grow.
in three
Right.
generations. I mean, that's the adage, right?
Yeah, yeah, exactly. Yeah, one generation builds it, the other one kind of like doesn't grow it, maintains it perhaps, and then by the third generation, I think that it's on its way down. Yeah.
Mhm.
I'd love
Yeah,
to hear.
you guys gave me a wonderful idea. I mean, my daughter, she's 12. She's worked in various businesses of ours, and she does a lot of my like art and social stuff. And I'm like, I should have her on my podcast. This would be amazing.
Yes, we would love to have her. So if you want to come and join us next time, she gets into the groove of podcasting, and we would love to have her. With Sophia, we've even discussed that we want to bring more of of her generation as well to come on the show and talk money and talk wealth and have that be a conversation that is normalized amongst girls. Definitely, and I think it's the foundation of making sure that there is in women, that there's big money in women's hands, and that there is personal power also behind it, not just the wealth in itself.
Mhm.
Now tell us about now how you got into the car washes. Is it the same mentality? Are you looking at it the exact same way? I understand, like, for example, in multifamily, we have a leasing agent, we have the maintenance people, we have the HVAC person, and so on and so forth. And so in a car wash, I'm assuming you have, equal, similar types of positions, but I think of it as a much more active, like, a venture, than the other. So tell us a little bit more about car washes, and how did you get into them, and how did you start with that?
Yeah, really coming out of COVID, we were already seeing the writing on the wall with cap rate compression in the multifamily space. Cash flow was being compressed. We were already seeing that, and our investors, especially when they're a passive investor, they were chasing yield. They wanted to continue to maintain their cash flow. And so we looked to see, like, how can we pivot into a cash flowing business
Mhm.
that would had an underlying real estate component and so how I talk to investors is, if you invest in express car wash, I mean, one, we're very specifically in express car wash, but when you invest in this, it has a real estate component, but
Mhm.
really what you're investing in is a cash flowing business.
Business,
And
yeah.
so we built our model from the ground up. We're the first company to build a third party management company, because really we had to create all those operational efficiencies for ourselves. And we
Yeah.
wanted to scale a unit count of our portfolio, Express Car Wash portfolio, that would entice a REIT or insurance company or another private equity group to purchase it in bulk, or maybe we IPO that,
Yeah.
which means we got to get to like 100 units at
Yeah.
least
What
in
does
order to
I
make that happen.
Can you, Sophia, go
what
ahead
does
and answer?
IPO mean?
Oh, initial public offering. So stock
Oh,
market exchange, right? Ring the
okay,
bell,
okay.
stock market.
Basically, it goes
Um,
from the company being a private company
Yeah,
to
to
being a public
public.
company where the stock is being sold at the
Yeah.
stock exchange.
I understand that. It's just the
Now, she
abbreviation.
also talked about cap rate compression. Did you
I
understand what that
do
means?
know what that is.
Okay, good. Okay.
So I love it. I love it. So yeah, we looked specifically at express car washes. So, you have your full service car wash. You have an army of people that will take the car through the tunnel, vacuum out the car, wipe down the car, maybe detail the car. Um, it's very labor intensive.
Mhm.
And then you have like your automated car washes that are attached to like gas stations where you kind of drop your coins or scan your
Yeah.
card and, take the car through. Express car wash is kind of the marriage in between those two.
Okay.
It's kind of like a fast food of car wash.
Okay.
Are you going to get, a detailed inside every single time you go? Maybe not. It depends on your package that you
Mhm.
buy. But we can wash 400 to 500 cars a day with just 2 to 3 full-time employees.
Yeah.
And so, somebody's package, we start our monthly recurring revenue subscription model at $25. It scales up to $45.
Mhm.
And, people see value in that because they can make a right-hand turn into the location. And 5 minutes later, they got a squeaky clean car. And maybe they've even vacuumed them out themselves, or maybe one of our staff has done that for them.
When you're
Um,
looking at the acquisition of an express car wash, what price points are you looking at?
For that, so if we acquire, we're trying to acquire somewhere between 7 to 10 x of the EBITDA.
Okay.
So
What
that so
EBITDA?
they're essentially 7 to 10 x of the profit.
Mhm.
Okay.
Earnings before interest, depreciation, taxes, and amortization. And if I just lost everybody, guys, you can find me at Whitney@passiveinvesting.com. I will demystify everything for you. Um, but long story short, so we tried to purchase in that 7 to 10x range.
Yeah.
Sales exit at 12.5x EBITDA.
Mhm.
Um, Now, why would somebody sell at a lower multiple? Well, because they're mom and pops and they probably kind of like the same thing in self-storage. I think of express car washes like self-storage was 20 years ago.
Mm-hmm.
There is no third-party management company. They have to, this mom and pop, if they want to not be an owner operator, they have to get to, 5 to 10 locations before they can even hire a regional manager. And so most of them aren't going to scale like that. And so their chance to exit is to sell those packages to roll it up to a larger private equity group like us. Um, but also another thing that we do, you kind of like what we're seeing in multifamily express car washes, especially in the primary markets. There are a lot of people building. There
Mm,
are developers of express car washes, and they're just there to develop the land. They could give two hoots if that thing's profitable after they sell it to an operator.
an
We
operator.
don't we don't like being in those areas.
Yeah,
Okay, we want to be in a very low competition area. So we love the tertiary markets. And sometimes that means that we actually have to go build the car wash ourselves.
makes sense.
And so if we're going to build, we're going to be in probably for a basis around $4 to $6 million.
Okay.
Hmm.
Okay. Now, and just to bring the example of the 7 times multiple, basically, of profits, can you, as an example, what is a yearly profit when you're buying, an express car wash? Just throw out a
We'll
number.
just call it, round numbers. Let's say, $1 million in like
Okay.
a car wash that is,
Profit?
highly running really well,
Hmm.
highly profitable. Their profit is $1 million. If we did 10x that, then it would that car wash would trade at $10 million.
Yeah. And you're looking to buy like around seven then, at
Seven to
7x.
10 depends on
Oh,
the
seven to
market and the
10. Okay.
competition, right?
Okay.
Certain locations are going to command 10, some are going to command 7.
Yeah.
So,
So that's basically what she's talking about. It's
A year?
very similar to what we have described when we talk about cap rates and
Mm-hmm.
how those are
Oh, yeah,
basically
yeah.
a multiple, and how it's a relationship of net income, and net income is the same as profit, and so on and so forth. So yeah, I want to make sure that every time we bring Sophia in, and we bring a guest, and that if there is terminology, because I think this is where for
A lot of
women
people get lost.
go get lost, and not just
totally.
women, I think just people in general of all ages kind
Mhm.
of like disconnect to really understanding money and investing in general, and just financial concepts, and so I want to make sure that whenever we do have a guest and they use some of the terminology, I'm like, Sophia, did you get that? Or do we need to explain it? Because
Mhm.
sometimes our guests have completely different way to explain it that could perhaps even be better than my way. And so that's why I always make the point that okay, let's take a little pause, let's see what Whitney just talked about, and do you really really get it? It's not just something that went over someone's head, and so on and so forth, because just like you might have that same question, um, even a woman in their 40s or 50s might be having the exact same question mark in their head. So I'm not just putting you on the spotlight.
Yeah, and I think that's great, and that's what I love doing is help kind of, you know, if you attend any of my master classes, like the one today, we're talking about 2025 multifamily trends. There was not one crazy graph in there, like from the Fed. Like I was like, we are just going to talk about what's happening, the base numbers, how does this impact your decision making? I think that's wonderful, right? And
Yeah.
when you come into the space, or go into investing in stocks, bonds, and mutual fund, there's a whole nomenclature that has to be learned.
Learn. Absolutely.
And that right there can, cause what we call cognitive dissonance, right? It makes somebody's brain get just go, whoop, I'm done.
Exactly.
I'm out.
Causing resistance, basically. It's resistance, pressure, and you're like, okay, I disconnect from it and I go someplace else or do something else. Yeah. Now, you mentioned that you have been teaching a master class. So where could we learn more about? Is this a free master class? Is this something that we could, join you in?
Yes, absolutely. So, yeah, if you go to passive investing with
Uh-huh.
Whitney.com,
Uh-huh.
there it's going to add you to our passiveinvesting.com list where you can see our deals. You'd also get a one-on-one call with me, but you get access to our weekly master classes on all things passive real estate. And then also, I do a monthly skill building webinar.
Okay.
So we talk about how do you set your goals as a passive investor? What does risk look like? And so we incrementally lead somebody through all those skills they need to develop. That way, through the course of a year, or through 12 videos, I should say, they have the skills necessary to go into their first or next investment with confidence.
That's amazing. Well, I am really grateful that you came and made time out of your busy schedule to be with us today. Thank you so much for pouring into my Sophia. And
Yes.
if you had, three pieces of advice that you would leave, that you would want to leave a woman with, that is either starting to invest or starting their journey of investing, what would that advice be?
Ooh, three. I think, well, first define what you want. Get really clear on what you want. Cast that vision and don't do it from inside the box, right?
Mm.
Don't, I think a lot of people, when they start casting a vision, they're looking at their bank account today, going, well, in 10 years, if I save so much a year, I'll end up with this. No, in 10 years, just think outside the box, gloves off. We got a genie with a magic wand, right? Like, what does 10 years look like? Because that's going to inform who you need to become in order to make that vision reality. So what do you want? Let's attach an emotion to it. Why do you want it? And I'm going to give four, if that's okay. Who do you need to become to
Absolutely love
get
it.
it? So we need to think about getting our mindset right, getting our skills built, getting people in our world, our network. Okay. Investing is a team sport. You can't do it alone. Well, you can. It's not nearly as fun, but also you're not going to go nearly as far. And I think this one's especially for my women. You have to honor your boundaries and your thoughts, your preferences, your beliefs, your boundaries in order to get it done. Because it is so easy for me to get off this webinar and walk through the house and go, oh my gosh, like the laundry isn't done, the dishes aren't picked up, like, right? You have to carve out that time for yourself, even if it's just 30 minutes a day to work on your goal. Set a boundary.
Mhm. I like that. I like that.
Tell
That's
everybody to go away. Like, do whatever you need to do.
yeah. I mean, I don't think I've ever met anyone that where if they valued their time less, they didn't than money, that they didn't have a problem with both.
Mhm.
So I honor what you say there in terms of boundaries with time specifically to work on your goals. Whitney, thank you so much for being with us here today. It has been a pleasure. We are definitely going to go into passive investing with Whitney.com and check it out and become part of your list and just see what you're up to and what's going on in your world, and just keep on learning because like you said, yeah, investing is definitely a team sport and it's better when you do it with others. And more than anything, it's better and I feel like easier when you can tap into someone else's genius. We know absolutely nothing about car washes. We know absolutely nothing about storage units.
Yeah.
And it is, I
Now I
think,
know something.
yeah, now we know a little bit more, but we can totally take a deep dive,
Oh, 100%.
with you, Whitney. So thank you so very much for being here with us today.
My pleasure. Thank you.
Yes, and for everyone watching, if you enjoyed today's episode, give us a 5-star review, share with an important woman in your life, and we look forward to being with you on another episode of Becoming Wealthy. Thank you so much, and until the next one.